Hello and welcome to the Mortgage Conversation with Saffron for Intermediaries. I'm your host, Tony Hall. Delighted today to have a wonderful guest panel, and we will get them to introduce themselves to you in a moment. Before we start, I just want to say that we are recording this on Thursday, the 13th of November. So anything that we discuss will be up to that date. I will also say that the views and comments expressed today are those of our own and not necessarily of our employers. So let's meet our guests. Firstly, hello to my co-host, Lee Williams.
Hello, you all right?
I'm very well, thank you.
Good.
Yeah. I think everybody knows who you are.
Yeah, absolutely.
So we'll move on quickly. Delighted to welcome a returning friend of the show, Dan. If you could just look at our listeners and tell us who you are, where you're from, and what you do, that would be marvellous.
Of course, I'm Dan Gracie. I'm from Panthera Finance in the city, and we focus on high net worth and complex borrowing solutions for clients.
Fantastic.
In a nutshell.
Excellent, thank you very much. And a big mortgage conversation welcome to you, Andrew.
Hello.
If you could do the honours to our listeners, that would be ace.
Hi. I'm Andrew Montlake. You can call me Monty. I am the CEO of Corico Mortgage Brokers and also the chair of the Association of Mortgage Intermediaries, apparently.
Allegedly.
Allegedly.
Excellent, thank you. Right, that's what a panel. Delighted today, really excited, and we got some. So because this is going to go out on the 1st of December, I thought we would add a slight Christmas theme to our discussion. So we're going to use the and talk about the ghosts of Christmas past, present, and future. So we're going to look through our year and what's to come. So let's start with past. So I'll be interested really just on a quick reflection. Dan, I'll come to you first. On 2025, how's it been for you?
It's been an interesting year. I mean, some people might not agree. I feel like this is the first year where we've had a patch of stability for about 6 months in the middle. It feels like nothing major changed, and borrowers made decisions, and lenders didn't make any big changes. The FCA didn't make any changes. We've now come into the complete opposite, where many changes have been mooted, and so everybody's waiting to see what happens, and that affects the mortgage job, whichever part of the industry you're in. So I think it's a really, really interesting and varied year.
Monty, what about you?
I'd agree with that, Dan. Yeah, I think that's an interesting point you made. There was that middle section where
Just
we were
a few
like,
months.
stability.
The eye of the storm.
We need boring politics. Yeah. Please, can we have some boring politics? No one do anything stupid. And yeah, but dovetailed on the end of that of periods of change.
Yeah.
So yeah, it's been a strange year. It's been okay. I think I give it a 6 out of 10.
Yeah.
Maybe a 7 in parts. But yeah, there is some optimism for the future. There's cautious optimism. There's a lot of worry. Obviously, where we're sat now, we're waiting for the budget and whatever changes that might bring. But there's a lot of pent-up demand there. There's a lot of people who want to do something in the near future, and there are some green shoots there for next year.
Good. Lee, what about you from your personal or from a lender perspective?
Well, it's exactly the same. It's been nice. It's almost like a false sense of security that we've been able to go, well, there's a few months where there hasn't been a huge amount of change, and you start forgetting what it feels like when there's always so much. Like when you've got young children and you've actually got through those sort of stages and then they regress again. Feels a bit like we're getting to that stage where, there's that questions and ultimately then the pent-up demand. And how many times we used that phrase in the last few years? There was a time where it wasn't used, and it's absolutely it's so obvious that it's there now. So excited for hopefully getting this stage out of it, and what I'd love to see is actually some plans that actually go beyond one budget, so we actually have some consistency moving forward.
Good. Sticking in with the past, but kind of dovetailing onto the present. But so this year's been a good year dominated by relaxation in regulatory rules on affordability, which I think we can all agree has been a game changer. So I suppose, Monty, have they helped you, and do you believe that lenders are doing enough to utilise the opportunity?
I think they are actually. I think lenders have embraced it. I think the changes have definitely helped. We're seeing borrowers who can borrow 30, 35, maybe 40 grand more in the mid-size and consistently more at the top end. You got some lenders looking at 5.5, 6.5 times income now, which is really helpful. And it seems to be a space where actually there's a lot more innovation coming through. Lenders are not scared to try certain things, seen 100% mortgages, 5 grand deposits, etc. So there's a lot more choice available now for borrowers, and the message that we have to get out as brokers and as lenders is mortgages are available. Lenders want to lend. Just because if you do go direct to a bank and you might get declined for whatever reason. There was a stat I heard which Steph at Association Mortgage Intermediaries always likes to say, apparently 60% of borrowers who get a decline then feel disenfranchised and actually don't think they can go anywhere else and then don't do anything. And we have to address that.
Absolutely.
So, but I think the market has opened up, which has been really refreshing. And I think from what I know is in the pipeline from certain lenders, I think that will continue to be the case going into next year.
Do you know what, Lee? I mean, I think you'd agree. I think a year ago, if either of us had said this next thing, we don't have an LTI cap on our Premier Income product, we'd have both gone, no, it's never going to happen.
Oh yeah,
You know.
sorry, I forgot to mention.
No, it's no, absolutely, he's not coming again. Honestly, useless. The one thing I said, say this, Mon.
That's one of the biggest ones. Isn't it?
No, but it's just funny because
There's 2 thumbs up for that.
Thank you. Yeah. We'll edit the rest out. You can start again. Just 2 thumbs up for Saffron. But that to us is a big thing. Dan, I'll come to you for your view on a minute, but that's the biggest game changer for us, and I never thought we'd see that.
Same. But I think what it has led to is a lot more need for education. As much as there's 100%. That need for customers to be aware, actually from a broker education point of view, it's kind of changed the game a bit for me. A lot of brokers it's created a bit of a gulf, in my opinion. Some brokers that are very used to just doing a very quick calculation and maybe not as holistic, and then you've got those brokers that are more holistic, dare I say a bit more experienced. Actually, it's sort of bridging that gap, and you're seeing the gap at the moment probably widen because those with that experience want to take on the more challenge and actually understand it.
Yeah, definitely. I think you guys have done the right thing because I've always argued that it's all about affordability rather than income multiples.
Absolutely.
And if it's affordable, the income multiples don't really matter.
Yeah, and that's what I've seen where I work on the more complex end. So I think Monty's absolutely right, and particularly in the mainstream, clients with fairly normal needs can borrow more, and it's a safer time to do it with rates being higher. If you're borrowing at 1.2% and rates could go up to where they are now, and you stretched yourself, you're in trouble now.
Yeah.
As your rate changes, if you're borrowing now with rates set to maybe come down, maybe stay roughly where they are, stretching yourself feels a little bit more stable. Moving on to that last point, though, I deal with complex borrowers predominantly, and the amount of people who say, I understand the lender saying I can't afford it, but I can. Can I show them how I'm affording this? Can I show them how I'm affording that? And I have to explain to them that's not really how, unless you're a very high earner and we're looking at private banks, that's not really how it works. There are affordability models that you have to meet, and they just don't understand. So I think there's still plenty of scope to look at affordability for complex borrowers, for business owners, for people who can't necessarily evidence their income in the traditional standard way, but they know they can afford what they're asking for.
Absolutely. I think that's, we don't normally plug what we do here, but we've kind of done that this year because we did our first Bitcoin mortgage this year as a lender. We got comfortable with a Bitcoin portfolio and lent somebody 3 million quid on the basis of it. So that's what I'm saying is lenders are starting to, or we are, certainly others are there or will follow, getting comfortable with, you have to move. We'll come on to this later with innovation when we talk about it, but you have to address the market that you're in. We're a complex lender. If we can't do this stuff, then we're a bit stuck, you know? So Dan, anything else on affordability that you think has helped you, or anything more that lenders could have done?
No, I think I made my comment there. Really,
Cool.
That I think there's a gap between the innovations in, which we're going to come on to later, but the innovations in mainstream and the innovations in the complex market. I think there's still work to be done there.
Good. Well, that's the past done. Let's move on to the present in our Christmas theme. So, Monty, you mentioned it already, but we'll come to that then. So, budget implications. So, what's coming? What do you think the impact is going to be? It's funny because the previous budgets, I was asked to be a live commentator for Financial Advisor, and I sat in their studio all excited and did nothing. So they've stopped inviting me now because I'm a bit of a Jonah when it comes to mortgage budgets. So something's definitely going to happen this time, I think. So is this the one? What do we think is going to happen?
It's a really tricky one to know where the Chancellor is going to go. I think there needs to be stamp duty reform. Whether it will come in this budget, I'm not sure. There might be some tweaks around the edges. I think there'll definitely be changes to things like ISAs. I think it's obviously a tax-raising budget, let's face it. So you might see some higher stamp duty or other changes at the top end. You're going to see some tweaks to taxes generally. I think you might get an income tax change. I'm a big believer that actually they should do that. Actually, they should just pull the plaster off and do 2p in the pound income tax rise. I think they sort of, it's a shame they made their promises before they got elected. But because you don't really know what the finances are like until you get into power and look at the books.
Absolutely.
So it's a really difficult one. I also can't say too much. So it's going to be interesting.
Fine.
I think.
No, that's good. I mean, Dan, I'll come to you, but for me, I hope they look at the higher end of the scale of tax, corporation tax, and start nailing these firms that are getting away with giving nothing. Yeah, we all know who they are. You know, they're not breaking the law, but morally, I don't think it's ethical, and we need to address that because there's an awful lot of cash flowing around there. But Dan, what do you think that from what's been touted is the impact going to be?
It's the point is that it's been touted. We just don't know. That there are proposals and there are ideas and there are mootings, but we don't know. Stamp duty is huge for me because everybody thinks about the first-time buyer. Everybody thinks about the person moving home. But what about all the people who are being caught finding that they can't move their buy-to-let from personal name into an SPV limited company? Well, if stamp duty is changed or removed, then that changes that completely, and somehow we don't know how it would change it. Families transferring, I deal lots of families transferring properties to each other for a variety of reasons. There's normally, unless there's no mortgage, some form of stamp duty liability. If they change that, this opens this up. I'm working on a case at the minute where I need to make this mortgageable. I need parents to transfer the property to kids. That's the only way this works. Won't go into the reason because it's someone's mortgage. Stamp duty is a big part of this. If it wasn't there, or if it was different, the advice changes completely. Not from me, I don't give tax advice, but from the people we have to bring in, they're going to have to advise very differently and the solution would change. So you say we want to move stamp duty because you're thinking about one thing, but the knock-on effects that ripple through the industry are just huge.
Yeah, Ali, let's come to you for my two penneth. What do you think?
Well, I think it was an interesting thing this morning where they said GDP was up by 0.1. So literally no growth again. So I think it's an interesting point that obviously we're going to be looking at taxes rise, but we have to look at where the growth comes from. Can't just constantly take from pocket to plug that gap. I think that's what I'm looking forward to. I'm hoping that there's going to be a longer term plan purely rather than just what does the next year bring us. And there's things that have been muted, even the last budget that hasn't really seen through yet with the small developments and other things that they were planning on doing. Again, progress on those and seeing where we're getting with those. I think they need to add that into the mix. But Yeah, it's an interesting one because you can't go on 2 articles and see 2 things that say the same thing. There's a lot being thrown out there, but I think with the lack of growth going on in the market and on our economy, we have to look at how we can grow our economy as well as ultimately where the taxes are going to come from today, which obviously does normally mean they don't work hand in hand.
But I desperately hope whatever they do is a clear change.
Yeah.
And it's done in one. We see time and time again tweaks upon tweaks upon tweaks, and it just causes what we're moving back into now, which is a stagnant time.
Yeah.
For borrowers.
Yeah, the tweaks are because they're hamstrung by what they said. I think look, people disagree with me on this, and might be quite unpopular. I wouldn't want her job, and I think she's doing a lot better job than people say. I really do. I think she's trying to skirt a lot. I think be under no illusions what happened under Liz Truss. Boo. Sorry, I can't say it. We all do.
She's behind you.
Be under no illusions what happened there in terms of how that moved the markets.
Yeah.
And as a result, everything is spooked. And loads of people say, oh, we should just take on the markets, don't worry about it. But the reality is we can't afford to with our debt levels so high at the moment. So she has to do things very carefully, and it is a very tricky balancing act she has to actually get these through. So we'll see what happens. But I have a lot more sympathy for her and for the difficult decisions that she has to make, balancing the left side of a party and what actually the markets want to do, and actually the state of the finances. It's I mean, bloody hell.
Oh no,
I wouldn't want that.
It's a terrible job.
It's horrendous for anybody in that position. But you know, the more you get into politics, and I'm looking a lot slightly segue of this with my NAXPA hat on. The planning reform that's needed. It's you know, it's such a mess. You know, you've got 313 local authorities that all act independently, or even though they're under statute to deliver enough housing plots, and there's nobody measuring it. There's no challenge. So if that's one element there. So I think mine for the budget is around, you've got to stimulate a house building economy. We don't build enough. So what they got to do to stimulate that? You can planning reform, that's great. That's not taxation, but that will free it up. But they've got to do something that enables people to build more houses, or do something to repurpose sites, you know, urban sites, because we've got so many empty premises. Look at every high street.
Yeah,
you know,
exactly. I mean, I think the point I made to the Chancellor is basically you need this long-term plan. What's refreshing is, for the first time, you've at least got people within government talking about long-term rather than short-term or just electoral cycles.
Yeah.
And you need a long-term housing plan which is cross-party support.
Absolutely.
Which is possibly led by a professional housing czar.
Yeah.
And you need a housing minister that's, do you know what, that's your job for the Parliament. You're not going to chop and change. This is your job. You need that consistency and cross-party support. And you need private residential, the buy-to-let market, PRS, and social housing, all working in conjunction. But you can't solve it within a Parliament.
No.
It's got to be long term.
Yeah, this is it's a systemic issue over generations. I think that's the topic for another podcast, actually, because I'm moaning about that for hours. So let's move on to another present day challenge. There's a buzzword around at the moment. It's not a buzzword. It is diversification. You go to a lot of events. It's all about how can brokers diversify because the food sources you had are not the same anymore. We've got a different. You know, you've got 18 million UK adults all now as multiple income earners. You know, doing more than one job to survive. So let's come to you first, then, Dan. What has your business done to meet the needs of today's borrowers?
This is a topic I feel quite comfortable in, actually, working with Panthera Finance. I think it's something we've done very well. Our broker model is to take on brokers who have a reputation, a niche, and experience. Everyone has a niche. We've got 2 or 3 brokers who focus on commercial bridging development. We've got a couple of brokers who focus on first-time buyers and particularly new homes. One of our brokers is prolific with all the new homes builders. We've got me with complexity, with complex income, with expats. We've got and all things complex. We've got 2-3 guys who focus on high net worth, ultra high net worth, family, office kind of mortgages. There's not much we don't cover. We have a few people in each category. We have our own compliance consultant, whose own personal tagline is to not business prevention. She calls herself. She finds a way to make solutions work for clients, not just put blockers up. We have links into, our sister firm is a private family office, which most people know, a multi-private family office. So whatever a client's need is, we've got a home for them. That's really important, I think. And it makes us very, very diverse.
Amonte, what about Corico?
Yeah, very similar. I think brokers have got challenged now, and you've got AI, whatever that becomes in the future. That's a podcast in itself. No?
Yeah.
But you've got, if you're just doing your basic mortgages and your basic remortgages, then potentially there's a shelf life there.
Yeah.
In my honest opinion.
I'd agree.
I think that doesn't mean that it's going to go and you're all replaced by robots. It doesn't mean that at all. But what it does mean is that you need to look at other areas, and that's something we've been very. It's basically how we were born. So we basically always had a commercial section, a specialist section, so we did bridging, development, etc. We want to finance a complex hotel, we can do it.
Yeah.
Very similar to you guys, but also it's about bringing people up and helping train them to do that specialist stuff as well, because sometimes it's dangerous just to go, I'm just going to do this commercial bridge over here without the knowledge. So actually Julian Ingle, who runs our specialist team, he has his weekly training sessions and meetings. It's about passing on that education to people. So there's that. We've also brought in lifetime equity release for the first time, because we've had the right broker, Louise, to do it, and that's been really successful. So we've also done that. It's also about diversification in terms of, it's not just a mortgage. It's, are we referring to a protection specialist? Are we doing the GEI? Yeah. It's about bringing everything together into that one place. And as most of you know, we've recently been taken over by One Dome, and actually as a tech company, their ethos is, let's put everything into one environment where you're dealing with the broker, you're dealing with the solicitor, you're dealing with the estate agent, and everything's all together. Just
a good ecosystem.
So it's all about that diversification and that knowledge upskilling of each broker is going to be really, really important in the future. And if you can't do it yourself, make sure you're allied to specialists who can do it. So the motto at Corico is, we want to be able to deal with any customer at any time of their choosing, in any method they want, for whatever they need. Yeah. Every financial decision they need to make in their life, we should have a place for it. And that's how people have to think. Holistic advice is a term that you either love or hate, but it's that type of thing.
Yeah, absolutely. One of the speakers at the L&G event on Tuesday said something which really resonated with me. Tiny little phrase, and I forget who said it, because mortgage brokers can't just sell mortgages, they need to find solutions. Yeah. And that has stuck with me really strongly. Yeah. It really 100%. Describes where the industry is at now.
Yeah. And you need to do everything you can to help that client, whether or not you can actually help that client. Yeah. And that's something that I always bang on about, that my people are really fed up with me. Yeah. You never know who that person on the phone is connected to.
Absolutely.
Correct. You never know. So as long as even if you can't help them, even if it's a small loan, whatever, when you put the phone down, they have to leave with the impression of, do you know what? Dan really helped me. Yeah. I really like this guy.
Absolutely.
And when they're talking to whoever, you're going to get a recommendation.
So, Lee, I'll come to you from a lender's view, but that's how on that point, that's how we instill with our BDM and phone teams around, if you can't help, tell them who can. You know, our guys need to know their competition's policy as well as ours.
Yeah.
One, so that we can counteract it and go, actually, I think you might find that's not correct. Or more so, we can't do it, but here's 3 lenders that can.
That's a great point, yeah.
And we know that brokers love that. And we'll get the call next time.
Yeah.
So on that diversification then, have you seen your lender spread change?
I think ours is probably about as wide as it can get anyway, to be honest. But yeah, that's whenever I have a quarterly review, the lender spread is not the bit I get my knuckles wrapped over. No. But the thing, I'm going to give you a slightly different answer to that, or answer a slightly different question. What I love as much as anything is getting to know a new lender. I love finding a new lender's niche. I bumped into, plug a couple of your competitors here.
I'll edit it out. It's fine.
You can edit. You can edit out.
It's all good. It's just carry on taking away.
I'd like to say Saffron have done some fantastic mortgages for me this year, and that's true. But so have Earl Shilton Building Society and Beverley Building Society, 2 tiny building societies who I bumped into by accident at an event this summer. Got their numbers, spoke to them for 2 minutes, connected, found out what they could do. Both of them have rescued seemingly unsolvable cases for me this year. And it's about finding the lenders that other people don't know about 100%. And asking them questions. And often they won't even tell you what their quirks are, the real deep quirks, because the deep quirks are often just appetite. It's the appetite of an underwriter. And so... yeah, answer to a different question, but it's getting to know as many lenders as you can, getting to know someone in there, and just finding out what makes them tick can solve you that case you needed solved, and not overlooking a lender. These things are vital for me.
No, I mean, Lee, let's come to you on the diversification point from a lender perspective.
So just to follow on about the... how we're working and how we're changing. I think the key thing that I'm finding in the market, as well as us as a lender, is we're so keen to give a solution. Sometimes we don't even know the problem. So it's like asking the questions. We've got to ask more questions. Yeah. And that sometimes is a mindful state. Is actually, I need to give you an answer quickly because we do everything quickly. But actually, I'll just ask a few more questions, get to really understand the situation. What we actually find is that we're then telling brokers and asking brokers questions that they haven't thought of themselves. So they then go away and find those questions, those answers. They've got those answers, then they're in a situation to actually get a solution. And I think that's the key for me, is that I think there's loads that can get the solution, but are they getting the solution to the right problem? And actually understanding the problem is so key. So that's what we're doing. We've been working on. That's what we're always working on. Is can we ask a bit more rather than the question being, do you do joint borrower or proprietor? I can give you a quick answer for that, but actually what I want to understand is why. You know, why are we going down that route? What can we do? And actually, what's the real problem? So I think that's where the innovation's coming from our point of view, and I do think that open-mindedness is so key. So yeah, I'm reading a book at the moment. It's about that, because I do think that sometimes we can be very quick to be very quick to want a solution, or you know, and actually we need to be more open-minded.
You know, I always set our team a challenge of make it easy for an underwriter to say yes, not no. Yeah, and you do that by getting to the real hub of what we're lending against. A phrase that Lee and I know only too well: underwrite to the risk. So highlight the risk, highlight the mitigants to that risk, and why we should do this deal. So you don't get that from high-level questions. You've got to get stuck into that and really drive it. So that's one of the things we drive.
Yeah, and that's brilliant advice. And that it plays into the education point of brokers as well, because there are a lot of brokers who are starting to do more specialist stuff, but sometimes they don't know the questions to ask, and that they're getting, or they're afraid to ask the questions because they think the client will find that too intrusive. Yeah. And a good broker, and I can bet your life that you do it, because I know our guys do it who do the specialist stuff, they're not afraid to ask those questions that might make the borrower feel a little bit uncomfortable, but actually will leave that borrower with, do you know what? He's asked me something that no one else has
Yeah.
asked.
Get
He
told this
really
a lot.
understands.
Yeah.
He really understands me.
Yeah.
And by asking those questions that really understands me, leaves that client thinking, do you know what? He really cares about me as well.
Yeah.
He cares about what I'm trying to do.
Yeah.
You have to spend time with the client. I borderline
100%.
refuse to work with a client who won't have a phone call with me at the start. I don't refuse if they really want to engage via email or some other means because they're in a country where they can't make a call or something. Fine. But you can end up in email tennis for a week because there are so many questions. If someone's got a complex situation, everything they tell you leads to another question, and a phone call does it in
that's
20
right.
minutes.
Yeah.
Emails could be a week.
Yeah.
So,
Yeah.
if brokers want to get into complex stuff, great, because it's really going to help them going forward, I think, as AI comes in. But it's a long, slow learning curve, and this sounds like such an easy thing to say that impresses lots of people, but you have to put the client first. It's all
Yeah,
about
100%.
questioning the client, finding their need, finding their solution, not thinking about what you wanted to achieve out of it, getting stuck into the client. What you achieve out of it comes at the end of the month. The job is about getting stuck in with clients.
Don't ask what you want, ask why you want it.
Absolutely. Good. Right. The last bit on diversification that we always stress to our listeners is if you are diversifying as a broker and you're doing something new, make sure your website tells people. Yeah? Because otherwise they might not know. And we see that so often. People's websites, I specialise in this. I can't see that on your website. So if I can't, and I'm in the industry, how the hell does your client or future client? So make sure your website's really clear on what you do. Otherwise, you'll be surprised you won't get any leads. Right, let's move on then to the future. Wobbly feature. I'll bring that in later. Hello. Right. Well, the thing is, we never edit this at all. It just goes out because they go edit, and I go, I can't be bothered. So,
I'm trying to think which ghost Robbie Coltrane was.
Yeah.
I think it's might have been
Absolutely.
past,
Yeah.
but-
Right. So. Innovation, that's a good place to start with the future. So,
Yeah.
Dan, I know this is a subject close to your heart. So what do we need to do?
Okay. You might have to stop me talking here.
I will if you mention Neil Shilton again.
I won't, I promise.
That's two plugs for you guys. You owe me one.
I want to see changes, not tweaks. The problem for me, everybody needs to change, not tweak. I think, but this could be wider bodies. This could be lenders. Time and time again, I see policy added to policy. Policy added to policy, and it doesn't speed us up or make things easier. It might open criteria up slightly, but it makes the process longer and longer and longer. And there are lenders who have been adding policy to policy, new policy to old policy for 10, 15 years. And they've still got all the old stuff in there, and now they've got the new as well. And the underwriters have such a long job. And I want to see changes that actually change things. If you think back to, I started in 2000, and my property career started earlier, but I started as a mortgage advisor in 2006, when you'd get a new client and you would send them a list of requirements which they had to get ready. You'd visit them or they'd visit you, and you'd have a discovery meeting, go through their documents, build a fact find. You'd set another meeting, maybe 2 weeks later, you present their solution, done. Now, there's a video call, there's 100 emails, there's 50 WhatsApps, there's maybe a LinkedIn, there's all this stuff, drip-fed documents and email and answers for over the course from starting from first conversation through to completion. But the mortgage process is roughly the same. The legal process is roughly the same. The valuation process is, there's a tweak. We do a few AVMs now, automated valuations, but the process is borderline the same, but we as people are living very, very different lives to 19, 20 years ago when I started. Change, not tweaks.
I think
I would
that's
like to see.
no. I think you're spot on. We're very slow as a market to adapt. We are genuinely, aren't we? You know, we try to, but it seems to take forever. Coming to you then, Monty. What innovation from your mindset?
I think what we're seeing at the moment in terms of the innovation actually borrows from the past. So it's quite interesting. Everything that's come now has been done before, pretty much, whether it's 100% mortgages or higher income multiples or low start mortgages,
Yeah.
etc. I do agree on the change point. The mortgage market hasn't, we've got the same products as we've had. Where are the real interesting products which will suit a generation who are going to grow up probably not with one job but with several jobs?
Yeah.
They're going to have little earners all over the place. They're going to be earning money in different ways. They're going to move jobs a lot more. The nature of work is going to change. So the nature of the products need to change with them. We're seeing some innovation, certainly in the long-term fixed market. People like April and Perenna, where actually their proposition changes a little bit with lifestyle as you pay off the mortgage, the rates go down, and that you can pay off for various things, various life events, whatever, with no penalty. We need to solve the offset mortgage conundrum.
Yeah.
Because I'm slightly older than you. So I remember when offsets sort of really came in, and it's going to change the world and they're going to be the norm, and now there's hardly any. Yeah. There's none in the buy-to-let space, which is arguably where they really should be.
Absolutely.
Because that would be a great way. So how can we work to make that to make the offset product or the flexible mortgage work, not just for borrowers but for lenders? How can lenders actually fund it properly? How can they make money out of it? Let's be blunt. So there's a whole range of different things that we need to look at as an industry. And what I would say is, the building society sector has been fantastic, as you alluded to earlier, in terms of the different types of lending that they can do. But really, as building societies, mainstream lenders, brokers, we really need to come together and think about how are we going to be relevant in the future? How are we going to provide those products that are going to be relevant in the future? So I'll tell you what's going to happen. Someone we've never heard of is going to come in with something different, which is going to blow the market up. And we all have to be careful that we're all not disintermediated from the market. So I think working together is going to be the way to come up with some real good policies and good products for the future.
No, I think you're right. I think the one thing about the industry actually is, one, we all know each other, and that should be to our advantage.
Yeah,
So we should be able to trust each other and do stuff. I mean, you're saying some people are coming along and doing things different. Obviously, Rely launched yesterday,
Rely,
and that's a game changer. That's one that we're watching. The fact that they're going to be banging out offers literally like that, and taking all that stress away is superb, and it's definitely where we need to get to, and how and I think how AI moves. But as you say, if somebody comes in as a disruptor and goes, "I've got funding, let's do this," it's going to be it. But that's probably the edge of the cliff that we all need. No one does anything in life until you're on the precipice.
Yeah.
They could be. I've sent their terms out already, so I'm looking forward to seeing how it goes. But they could be interesting because, it's such an interesting point you made, Monty. But the innovators tend to come in on a really specific niche.
Yeah,
whereas Rely are coming in on the whole buy-to-let piece. So that could be, if they actually innovate, it could be really interesting. Because other people will have to jump on board if they really do.
I mean,
innovate.
they're innovating in terms of service
Sharpen
delivery.
up.
The product's a product, but they're
Yeah.
innovating in let's not make these complex things too complex, or let's use technology to drag all that together and do something really well. So,
And that's where the magic is, when you've got technology being used to support human advice.
absolutely,
and decisions.
absolutely,
Yeah.
And actually, that's where the magic happens.
absolutely. Lee, anything from you?
Well, I'm just going to repeat everything you've just said, I guess.
So that'll be a no then. Let's move on.
No, I think the only thing that I would say is that from an AI point of view, and you raised something to me a couple of months ago, actually, Monty. You did a search and highlighted that we did something we didn't do, that AI said, and I think that's the key thing as well, is all this innovation is fantastic, but we need to control. Was that the client? Was it? Oh, I didn't say you searched it. I don't want to blame you.
I gave some recommendations out, and the client came back to me with a list from ChatGPT.
Yeah.
And I was like, I'm pretty sure.
No, you
that
were spot on.
these things
It's,
aren't done.
it's a known
and I
AI
contacted
phenomenon.
5 lenders, even though I knew the answer, just to make sure.
Yeah.
Yeah.
It's called AI hallucination.
Wow.
It's actually a term.
Oh, is it?
okay.
Yeah.
I haven't heard that.
Yeah.
But I think that's the key thing, is that control as well. So as much as I want, we're very keen. I'm very keen to see things as smooth as possible. But ultimately, we can't rely completely. There's got to be that control matrix there to make sure that we're not in a position where we're not then giving misleading or wrong advice.
Yes, absolutely. Good. So we need to change.
There's a
So-
couple of really specific things I'd really like.
Does
to
it
see
mention any of our
innovation
building society competition?
on. No,
That's all right
doesn't.
then. You may continue.
credit scoring.
Right. Okay.
My God, people are getting punished for a tiny mishap 4 years ago. People are getting punished for some third-party thing that's come onto their credit. Perhaps someone who owns a buy-to-let and a tenant has caused something that they used to live in the property 10 years ago, and now it's on them. Just actual mistakes, and people can't buy. It's absolutely ruining them because we've got this ridiculously, what's the word I'm looking for, basic credit scoring system where people have to just fit a certain score, or anything they've done for 6 years is going to affect them. Whereas perhaps behaviours, I don't know. I'm not the innovator, but there needs to be some innovation on that.
Well, one of the bits of how AI is progressing is around that in terms of the only reason I know I'm sounding so knowledgeable on this is I presented yesterday to the NAXPA conference on AI in the mortgage market.
Right.
No, nothing, but I can just remember stuff. Yeah. So, but one of the things I built a career on that. Absolutely. One of the things that we're starting to use in credit risk, and that is going beyond the binary Experian as one measure for credit score and starting to use all the various insights coming into it to make better decisions. So not just based on that one parameter. So I think that change will come. And as lenders, we all want that. And it's kind of actually back to the question around offset that you talked about. As a lender, we would love to do that. And we'd love to do loads of stuff. But currently our origination system stops us from doing it. And I think that's one of the problems we have is legacy systems in the industry and the cost and the time involved in doing what we want it to do.
Yeah.
But we will get there. But I definitely agree with you on credit score. Let's move on to a bit more about the future, because we are at 45 minutes is gone already. So we will rapidly go on. So I know this is one that both of you will make you shiver as soon as I say DP25/2. The future of the mortgage market. You know, has the regulator jumped to the tune of the big banks that want to wrestle back administration efficiencies on their product transfers, etc.? Discuss.
I'm excited by it. There will always be a divide between the high street lenders and the non-high street lenders. And the borrowers who are suitable for the high street and the borrowers who need something more bespoke. There will always be that divide. And it's two completely different, that's clients, that's borrowers, that's consumer. If we go into the business side of it, they're two completely different business models. The big lenders are looking to profit as much as they can from as many deals as they can do as quickly as possible. That's been the way for years. The smaller borrowers are finding ways to profit by being creative, by doing things that they can charge a bit more for and put more time into. And that suits two types of borrower. That suits the borrowers whose needs are relatively simple, and it suits my clients, our clients at Panthera, who largely their borrowers are a little bit different. They might be high net worth, they might be business owners, they might be expats, they might have commercial, they might be asset rich and cash poor. Those people need something different. I still don't think they'll be underwritten by high street underwriters who have a quicker job, should we say. They do a great job. It's a very different job to your underwriters who have to put more time into the case. So I do think there'll be change. I'm really interested by how it will change. We don't know yet. There's lots of mootings. But I jumping to the tune of the high street banks, which is a phrase that's being used a lot, I don't see it. I think there'll still be plenty of space for both, but particularly both types of lender.
Cool. Monty, what about you?
I take a little bit of a different view. These are my thoughts personally. I hasten to say, I think we have to be really careful about what sits behind this, especially when it opens the door potentially to execution only business. I think there's a fundamental contradiction in policy potentially from the FCA here, where it's saying, okay, we can accept more execution only. However, on the other hand, you've got consumer duty, you've got vulnerable customers, etc. I think there's a danger that without advice, a lot more people are going to end up with the wrong product. They're going to end up not being classed as vulnerable when they need extra support. They're going to be people who are being maybe pushed into doing something, coerced into doing something, are not going to be spotted. All these things that a good broker will spot and be able to help with. I also think that although we do fundamentally agree that the mortgage market needs to speed up, it needs to change the whole home, but it's not necessarily the mortgage market.
Yeah,
actually,
it's
because the mortgage part of the process ain't broken.
no,
let's face it.
no, it's the
And I
it's the
think-
ecosystem
I think
surrounding it.
sometimes certain lenders in their feedback might say that it is when it isn't. I don't think speeding up the process needs to come as a detriment of advice.
No.
And I actually think that if you put advice in there, it speeds up the process.
Yeah.
Going back to the point that actually loads of people start their journey online, they might not understand things, even if now they can ask a few more questions, it's still not quite enough. And then they drop out of the process, and then they think, oh, I'm not going to bother. Actually, if they get advice early on, first of all,
Yeah.
and you deal with someone like you who can direct them to someone they've never even heard of, or someone like us who, well, we do the same thing, but Saffron will do that. Actually, here's an offering for you that they'd never have found themselves. Actually, that speeds up the process, and it also improves the economy. You get more transactions, etc., etc. So actually, brokers, the value of advice to the economy as a whole is not fully recognised and understood. And the fact that 90% of people now get an advised mortgage shows that actually that's a success of regulation, not a failure. And that's really important. That's something we should all be going, this is brilliant. People have voted with their feet. They want advice. So for us, the challenge as brokers is how can we keep advice and people front and centre, but still speed up the process even more. And I think where some of the lenders are in danger of going is they're in danger of, we talked about disintermediation. If you're a lender and you're just taking business online, etc., then you're really at risk of someone else coming in and just going, oh, well, I can do it 2 bits cheaper.
Yeah.
And then they have to go cheap. And then, oh, well, we'll do it cheaper. And it just becomes a race to the bottom. Because online, people aren't looking at brand. They're not looking at choice. They're just
purely
going for cheap.
purely cheap.
It's just cheap.
Yeah.
And actually, as brokers, we can have that speed with the added tick of choice and advice. Actually, we're at the advantage. And that's why brokers need to embrace technology and AI and look at how it can do all that.
Yeah, I look, fundamentally, I agree that anything that speeds up the advice process and takes out unnecessary bits is bang on, but should never remove it because that's an abyss you don't want to go down, really. We had one more subject, so I'm going to ask for a really quick response on this one, which is the obviously the Renters' Rights Act has now got formal royal assent. It's going to be a transitional period in all aspects of the Act. But very quickly, views?
I think there are positives and negatives in it, actually. I think that it's just another thing that landlords need to get to grips with in a world where they've been battered and bruised for a long time. There are certain bits in there that you look at and you go, well, actually, that makes perfect sense. I think it needs to be in there. There are other bits you think, oh, you know. I think what's interesting is, I know you need me to be quick, so
Yeah, it's all right. No, it's fine.
we'll
We'll let it done bits out later. It's fine.
Yeah, true. Yeah. Just edit.
Wherever I
Just
mention
edit it
another
out.
society.
Yeah. Just be
You've been-
huge blank
you've been
silences.
Yeah.
So yeah, I think what is interesting is the buy-to-let sector has been labelled as dead many times, and it ain't going anywhere.
No,
and actually, I think even with this, I think there's a lot of opportunities for landlords. I think it's going to be. I think buy-to-let lending will increase again. So I think, look, it's something we have to bed in, see how it affects everyone.
Yeah.
But I don't think it fundamentally changes things too much.
No, I don't think so. Definitely, the buy-to-let is not gone. It's just different.
Yeah.
It's not the market it was for the right reasons. Dan, very quickly from you.
This was the last podcast I was on with you guys. A shift towards professional portfolio landlords is what I think we'll see. I think hobby and accidental landlords will struggle. And I think I'm interested to see how the affordability model changes with lenders. I'm interested to see how they cope without ASTs. And I just think I don't think it will go. I just think there's some uncertainty, and I think it will adapt over probably a 12-month period. Once it starts, and it could come in very incrementally as well, but once it's in, I think we'll see 12 months of a lot of change in lending policy and affordability assessments.
Yeah, but
And pricing because of that.
yeah, it's all in there. But I agree, it's for the right reasons. Right, let's. One last thing on future, really quickly, just going around the room. So 2026, very quickly, one thing you want.
Change, not tweaks.
Change, not tweaks. You've heard it first. That's his new club.
And new tagline.
Gonna get a t-shirt.
Dan
mate.
says, yeah. Change, not tweaks. There you go. Excellent. Thanks, Dan.
Well, I haven't got anything so catchy. I feel like a failure with my marketing. Do you know what? Consistency. And that's consistency across the board. That's consistency from regulators, consistency from lenders, and consistency in market.
Fantastic. Lee?
Planning reform. Don't know if there's much to add there, but
No, absolutely.
it's so needed, and we're just seeing a bottleneck approach at the moment to developers, where if they knew that the planning reform was in place, they would be a lot more interested to get on in, as they said, build, baby, build.
Thank you for that. Look at that. We'll leave it on that. Build, baby, build, and change, not tweaks. There we go. We got some amazing taglines. So that
I'm going to send in a tagline.
no, please do. Yeah, have a
Hashtag
think. You know,
I'm very tired.
yeah, it's fine. You got a couple more minutes, but you can chuck it in. So that 54 minutes, 55 minutes has really flown by, and I think that's been amazing, and we will definitely do this again on other subjects. So a big thank you to our guests, Dan, Monty and Lee. Please do follow us on LinkedIn, and don't forget to follow us on your favourite channel so that you get notified when the next episode of the Mortgage Conversation with Saffron is released. If you are a podcast watcher, you can do that on Spotify or YouTube, but my health and safety warning always follows. If you do watch it, don't do so whilst driving or operating heavy machinery. So that's it from me. It's a goodbye from me, and it's a goodbye from them. See you next time.